Hello, traders. Dale Pinkert here with Mike Venezia at
Good morning.
TradeGATEHub. Hey, Mike, how are you?
You're doing okay. Thank you for asking. Yourself?
Good. Just want to remind our viewers we are powered, sponsored by TradeView Markets. And Mike, I want to start off with what's being featured in the market. I think what's pressuring mainly NASDAQ, even though S&Ps are under pressure, and that's yield spiking. Must have been a Brainerd statement again, Mike. He's trying to jawbone the market that they're on top of the job, right? So here we are. I thought that yields might be peaking here, right in here, but now a retest here. And the closest currency correlation to yields is US dollar yen, and US dollar yen, was on a tear. I'd point out this difference right here, that the yen is not at new highs, even though yields are. To me, that's a little bit of a tell that we might be reaching the end of this dramatic thing. And look how they're killing the bonds, Mike. I mean,
No, I
look at that.
I see. Well, the ISM number also came out today. I don't know if this was an excuse after after everything settled down yesterday, or I looked at it all yesterday. Listen, as you know, I've been bullish, but yesterday we were up on light volume, and I kind of thought about it after a little bit afterwards, and with all the hype going into the end of the month and and anything like that, it's no surprise. And you know what I mean? Just like you brought up a chart on the TLT.
Yeah.
I think after this one day up, this is the next day or two is going to really decide, in my opinion, that trend. If it's just if they had it down, it's the one day up and sticks or not. So it's, tomorrow, the rest of the day, or even tomorrow, how they react is probably more important than what's going on now, in my opinion. Right now, I would consider this healthy.
Okay. I noticed on your plan, 4550 was a big number to you, and it's a big number to me. It's this horizontal pivot that above it, it looks okay. Beneath it, and right here, we held your number.
Yeah, well,
So,
I'm not, like I said, you had it too, and we're not alone in this, in this thinking.
right.
You know what I mean? But it's fragile because, like I said, if we're not alone in the thinking, the margin of error is very little, because if it breaks it, it's not really going to be it's going to it's going to shake some people out. It could be, continuing to whatever next level it might be. And my next level is what, 4490 or something like that. That might sting a little bit. You know what I mean?
Yeah, I have some levels there at 44.5, and that was also that day that the S&Ps held up quite well when Powell was acting like Super Hawk a couple of Mondays ago. We had a hell of a rally here, Mike, so I know what you're talking about. I mean, and this is something that people want to check it. Go to the video on that day, and we were talking about a possible turn. And then what I think we might have now is this was the first pullback, and this might be a failing rally, and then we get maybe a pullback to your number here. And that's going to be an important zone.
It is an important zone because it's a crowded thought to what you would say, but the levels have held true, at least for the past couple of weeks. But much like how the S&P bottomed, if you will, if you just showed your chart
down here,
that was a situation where what else bad could happen outside of the word nuclear. Now that we're up here, it's like flipped. There are very few catalysts at the moment that would propel the market at least break through higher. There are a lot of resistance level, being the 200 days, and if you will, for certain indices, and it's not an indice driven market completely. I've been thinking it's a little bit more stock picking, but if you will,
here's that 50-day as well, Mike, right around the 4,500.
Right. So level. I'm looking at the fact that we do have earnings season. Outside of that, there's got to be, what good can besides this, I'm still believe that hedge funds, as I said on the TGH that I post all the time, and once again, I'm not alone, are short. And after making a big move up like here, I don't think that hedge funds would be pressing any type of short. I think they were in 24 hours ago, they were in pretty big trouble, and you're getting something healthy here. I don't think they would be necessarily adding. And I just think there's a little wind underneath the markets, because I do believe in that what I do post, and it's not the only theory, and it's not the only method. It's one of the methods that I do believe in. Just have to be kind of up there. I do follow.
It would be completely normal and healthy to get this type of pullback if the market digs in its heels down here. You don't want to chase a move up here. This is when, you're initiating positions. This is when you're taking stuff off, and now you're looking to reload on a pullback back to major support, 45, 4,400, right?
But by the way, like I said, I don't know if we're alone in that, to be redundant, but that's what I look at as well. I've been around a while, but the stocks that are acting, also there were a handful of stocks that, and I also pointed that on TGH, that were more important, and they did tip their hands. The rotation up or the squeeze, it's yet to be determined if it's a squeeze or a foundation. I believe it's a foundation. Took it up in the technology stocks, but these ag stocks, or these uranium stocks, or even the golds didn't pull back as much as the other ones rallied, which signaled a little bit of short covering to me more than a little bit of conviction. That's just me right now.
Same with Apple. I mean, it's making one pit stop before it makes new highs, and if you had a chance to buy it in the next couple of weeks under 170 down towards this level, it's a great shot for.
And Microsoft is the same. Microsoft is very similar, I believe.
Yeah, I mean.
Okay, now we're running into Okay, this is the conundrum. I'm using the word conundrum. Okay. I must be getting old. Is that it the same in how the indices pull back? Hold on a second. Let me go with the long term. How they pulled back let me just being specific. In the beginning of January, where we were saying that Microsoft and Google, there were these 4 to 5 stocks. We all know the FANG stocks were holding up the market, and it proved to be right, is that when they pulled back or corrected, the rest of the market got even worse. So I'm a little bit leery that the same situation might come into play here.
Yeah, I mean, look.
There are still a lot of stocks below their moving averages, except for the big ones, the FANG.
Yeah, but I mean, Microsoft doesn't look as good as Apple. This could be viewed as a correction, whereas Apple, if this is just a correction, it's one hell of a correction. To me, it looks impulsive, like it's going to go to new highs. But you're right, there are still broken stocks in NASDAQ, right? Facebook and
Square and PayPal, and even everybody has a big,
Amazon,
something like TDOC has rallied. Yes, TDOC has rallied from 53 to 73, but the year's high is 190. Punch up Amazon. That's what I wanted to look at. See, that's sensitive today to me. Amazon.
Yeah. So maybe it pulls back to 3,100, but these are mainstream stocks. And what I really love about your trading, Mike, is I learn about so many issues that I'm not familiar with, that because you're doing the research and you're following a much larger universe, and it makes it like looking at FANG is like all you're doing is trading the earth. No, you trade the universe. I mean, the whole universe of everything out there.
Well, first of all, if it's moving, I'm usually in it, and I don't want to be whatever you call it. But as you know, I also handle This is the conundrum with you. I'll be reading again. I lose sleep at night, and I'm saying that for a fact, about wondering how I'm going to place money long term than I am short term. The short term accounts. I think the trading has been very good. Yeah. In other words, if I think you look at Citibank, do I want to buy Citibank? Punch up Citibank, coach. I mean, when I'm looking to place money for it.
In fact, why don't you take over the screen, bro, and let me stop sharing here, and we could look at your stuff.
Okay, here's my universe, my general universe. To no one's surprise, this is always my main screen. Okay, so like I said, if you can still see the whole chart.
Got it.
You know what I mean? For the long term, I have fiduciary responsibility to do the right thing and place money through various of sectors, including being mixed. So, do I want? I mean, I'm losing. Citibank's a story. Do I want to really start nibbling in on JP Morgan here? I'm not really going to worry about if it's going to 135, 130, or 140 within the next month. But if I start building something, 4,000 shares, they down 6, 8 points, then I got to watch it, then they have to watch. So I don't, like I'm saying, that they haven't done anything major. Like I said before, the tell was when CF and all these other ag stocks, Moss, when the NASDAQ was really going up nicely, these stocks didn't rotate or pull back as much as they should. That was a little bit of a tell as well. CCJ have been pointing at how long it's been option activity going off here. You know what I mean? There's a little bit of churning and nobody really knows what to do, but certainly I don't think I would short it at this point. You know what I mean? Anybody that was short this would probably already make their move. And I'm not saying it's a short in general. I'm just saying for you saying I have 1,000 things to do, a look at my universe. That's something I do to look at my universe as a tell. So here we are again on the NASDAQ at their, but there are movers. Twitter, I think, held up a little bit of
that
wind.
was a
little bit of wind
move
between the markets. Some people got, this BRCC, Red Rifle, whatever, coffee, the stock moves from 20. So there's always, not to quote Jim Cramer, even Leibu's holding, XBI's hanging in there, right? I mean, nobody wanted it. Now's the time to keep buying it when it's going up like this. But let me share my screen and go back to TradeGATEHub because that's really where I get all the
info. Because I want to get back to your statement that, just trading the action and the money flow short term is much easier, and you spend time thinking at night, what about some long-term ideas? And isn't it possible that for many years we're on QE and we have a new regimen from the Fed, and the VIX used to hang out between, 10 and 15, and now it's great when it's under 20, and that the market might be going through, one heck of a transition. So it's more difficult to be a longer term thinker than it was prior to the Fed changing course.
It is. And, the reason why I got here with whatever argumentative level that we're speaking about is because, of the market usually, of follow through or price volume and good. Now the market, and I don't like the saying, I scold people. Once again, I'm saying things like scold, is that they say the market has no memory. And that scares me a little bit because my everything is predicated, or else I don't even, if the market doesn't have a memory, then why even develop a plan? And I'm being dramatic, but certainly, I'm going by. You just listen. I'm going to tell you, and it's boring, blah blah blah. But we all know what to do, and for some of the newer guys that get here, we'll get you there. Your learning curve is going to be, cut off dramatically, or whatever the analogy is, in half. Believe me, because we're going to help you get there. It took me twice as long, but it's all these fundamental principles. Don't let a loser go ahead against you. If you had some type of stop in your head or whatever, let it go. If it's a loser, a loser is a loser for a reason. It usually turns out to be a worse loser. Some of the stocks that you put on turn out to be winners. The ones that usually are good winners somehow usually, ironically, start working right away. So, this type of market, we're giving you to set the table. This is it. We're feeding you what to do or giving you ideas. And that's because, you're good at what you do. And I follow a lot of things. I'm always around it, whether I'm right or wrong. So we're in the right church, sometimes not in the right pew. So, that's all. My short-term indicators here, you can see here. This is what I look. Hedge fund exposure. On the bottom is hedge fund, is hedge fund exposure. They're all short. And by the way, this is going back to September 21st. And it's one of the, like I said, I'm not biased. I'm not all long here. I'll show you my account in a second. I'm not hoping for something to turn around. Never use hope. It's one of the indicators that I use. So here are hedge funds, and they seem to be very short. You correlate this anytime. So when the market has made this move up, I'm not saying they're short Apple, they're short Microsoft, or they're short Amazon, or they're even short Twitter. Twitter is going up on its own. I'm saying in whatever sector, as the market goes higher and they're short, some little pullback, it's just saying it's one, credit default swaps are going in our way now, aren't they, Coach?
Yeah.
All right. That's an arguable chart. What else do I use for indicators? I'll even go back a couple of days. It's just, I use rotation. I use what's going back with crude. Obviously, the geopolitical situation's going. I use sectors. I use sector strength. The reason why we're in plug and DE is because EMPH was going in. If I'm going on tangents, I apologize, but it's just you have to. The bottom line is you or I don't have a better system than everybody else. We're putting you or giving you the area to be around and develop your own system. Like I said, this is medical school. It's up to you to see if you want to be a brain surgeon or a skin doctor or a physical therapist. But right here, the universe of financial instruments that we use is watching commodities, oil, gold, silver. The coach is an expert on the bonds. I trade equities. That right there is, choose what you want to do. Ask questions. So
are there any copper stocks that you follow closely? It's really grown in popularity over the last few years during this bull market. And, copper differs from some of the other metals because there isn't a bottleneck. There is no bottleneck.
About Alcoa. Excuse me. I apologize. About a couple of weeks ago.
Yeah.
Do I follow copper? Let me see. SCCO. Yeah, I follow SCCO.
Shorted.
What's that?
Shorted.
You think so?
Well, I was talking to a fundamental guy, and he did make a good point that if there is going to be a recession, or even if there isn't, there are no bottlenecks. There isn't a lot of backwardation in copper. It's more of an industrial metal, and it's not. We don't need Russia. Most of it comes from Chile. So if there's ever going to be a commodity market that could cool off, in fact, I think you could be long gold, short copper on the spread because copper is about construction and gold is about destruction. So I've been watching this for a few weeks. Even Freeport looks like we're getting some type of topping signal. I don't like copper here, Mike. I think it's one of the few commodities, and everyone loves every commodity. But just like you are selective in sectors and stocks, not all commodities dance to the same, song all the time. And I think copper's out of key here.
Let's look at another. What else? What other copper ones? But you know what? This doesn't have anything to do with price action. This has to do with just a personal anecdote. I have a couple of people, high-level people, if you will, it's arguable, in Los Angeles, or that do a lot of commodity business. And I hear that everybody, if you're on here, Flag, and he's on here probably, a lot of people are trying to lock in prices in bulk as much as they can at these prices. So I don't know if that's reflecting yet. I don't know if it's a lead time, if it takes 3-6 months, but this information is.
So they're hedging up here. They're physical.
Yes, they are.
Great level to do it.
Yeah, that's why I wouldn't. That even from maybe the stocks are saying differently, but as of now they're not. They can go either way, but that's what I hear from a macro level. And these are sharp. These are one of my guys. So I wouldn't be buying copper here as well. No, I wouldn't.
Okay, just thought I'd bring it up.
No, touche.
I know you're pretty active in the energy space. Like crude had a nice bounce earlier in the week, but the action still isn't great in WTI either. So
I just pulled
we
up
close under 100. There's problems. Huh?
Well, here's natural gas up 8% on the day.
Yeah, that's a different animal. I think that's a bull market.
Yeah, no, it's completely from my due diligence and from what I see. Even how the CTAs are positioned, everybody is under positioned nat gas and over positioned oil. That's that I do believe.
Okay, all right.
Yeah,
that's good. Well, nat gas. What they're paying for it in Europe compared to us. What an arbitrage. They pay like 20 and we're at what, 5? So, I mean, huge difference. Natural gas is in demand. And I think there was news on nat gas today.
There was.
Well, Germany was no longer going to,
Bravo.
Correct. They're going to go to coal.
Yes, that's why BTU and then the other ones were up.
Okay. All right. Interesting.
All right. So long term and short term, all right, I'll tell you what I'm doing. I'm starting to buy this FUTU. I am going into a couple of China stocks here. As a matter of fact.
Wow. Well, you were there for that big pop a couple of weeks ago. That was amazing to me.
But now I listen. Now it really. I bought it.
Now you have more of a reason. It was more of a, a gunslinger trade a few weeks ago. Now at least you know where you're wrong if it's
No,
above,
no. I think there's a little,
right?
listen, I know it's a China situation, and I don't know if I have to throw this disclaimer out there. It's not for everyone, blah, blah, blah. I'm taking a position in FTU. I bought some Billy today. As you can see, now I'm up in the stock.
They
Giddy
look
up.
the same. Yeah.
Well, they don't look the same. And right here, I
Okay.
like the volume. Yesterday, it had huge volume. It broke out. Now it has, listen, it's near the 30 strike. I like where it is. It's not, I don't think it's, the other stocks are acting okay. I'm telling, I bought some Billy and I bought some, what's that I buy? FUT.
I've never seen China and the US be on different interest rate tracks before. After they had that real estate failure, what was the name of that big real estate outfit in China?
Oh, I
Mike?
know.
Anyway,
Something
yeah.
Con. I forget.
They're easing. They're stimulating while we're tightening. It's the first time I've seen diametrically opposed central bank policies between China and the US. It's going to be interesting to see how that plays out, but it should be more conducive to be in Shanghai or something like that than the US. They're easing.
Listen, as I say, Coach, listen, I'm not trying to be a hero here. Let me go to TradeGATEHub. I told everybody, hold on. I
You
did.
made a nice call on plug, Mo said.
Thank you. I did buy some few two on a dip.
Okay.
But listen, the bottom line is this. And it's not, I'm not trying to be a fancy, I'm not trying to be a wise guy. And it goes by this. Give me a second. And I told everybody if they're stranded on a desert island, LPI, somebody brought that, somebody's watching the feed here. Somebody brought up LPI today.
Yeah.
Is that there were just a ton of action coming in. Here's KCC. KC is a best bidless cloud play, has been an absolute debacle. So a little action today. Huge calls going off in KC. I took a little bit today. I'm down in it, as you can see. I'm long 14,000. Oh, hold on. I'm long 14,000 KC. I'm probably not going to add to it. This is the stock, but I think it pops. I think there's a little downside. I think there's a lot of upside. I'm not going to micromanage it though. Let me go back to, but I saw a lot of calls going off in these China stocks and they came to fruition. Here's another one. Intuit, huge option calls going off. Lulu, let me give another one.
Yeah, I saw you talking about.
By the way, see this
Jesus.
21 hours ago?
Yeah.
Unusual call activity in SST. Look what it's doing today. KC, buying calls there. Apple buying calls. So, Billy, I'm in it. Bull sweepers, active buyers the past few days. So, if a lot of smart option guys are coming in, and if the chart somewhat makes sense, which it does, it has some support here. It had huge volume yesterday, and it's got the 8 day, it's got the 21 day, and sitting on the 50 day. So I'm taking a stab here. It's not going lower. So that's what I'm in.
Okay. I saw, I think you posted, you used to follow LMT 978, Larry.
LMT, yes, I do. Because he makes it, well, I do follow him. Let's go to Larry. And he used to be on a private feed, and not really a private feed guy. Maybe it's my ego. I've learned to put my ego aside, at least in trading, but maybe not intelligence wise. But Larry's one of the handful of people I know. He's like in a Mike Santoli category. He puts it very simply. He doesn't complicate it. You look at his charts. There's not all these squiggly lines. What does he follow? He follows the 20 day, the 50 day, the 100 and 200.
I've interviewed him a few times. Do you want me to bring him on?
What?
I've interviewed him.
I know that. Yeah, bring him on. I'm a big fan. A lot of people on him, but he doesn't try to get sexy or fancy. Bristol Myers, and by the way, it is making new highs today.
Yeah.
Microsoft 20 and 50 day. I mean, he doesn't make it.
He's disciplined.
He's disciplined and he makes it simple. And as I say a million times, trading's not hard. Traders just make trading hard. So yeah, Larry's one of the guys.
Okay. Any last thoughts for our viewers and people that are going to watch a video later, for them to be thinking about going into tomorrow and the rest of the day today?
Well, you know what? Let me look. Well, I haven't looked at the market. I try not to look at my quotes. So here we are, 40. We're at 44.50. Here we are on the futures. Let me get this together. So let me draw a couple of where I'm looking at today. Let me go back at least. Let me go to 30-minute chart.
Okay.
We'll go to our levels.
Yeah.
45.50, right?
Yeah.
To where we held. It's also a gap.
Yeah.
Our next level, I say, is 45, basically 44.90.
Yeah.
That's where, by the way, it's a 200. You don't want it to break the 200. That's right there. It's very clear.
Yeah.
I don't know what you think, Coach. And back up higher is the 4,600 level through the higher gap. It's very simple. That was the high.
That's what it tested today.
That was a gap. So it's listen, trade between the, it has between, listen, I only started using these type of lines recently. I usually do it by memory, but they've been amazingly linear, the levels.
I don't know. Kind of looks like Wile E. Coyote to me on the ledge.
Okay.
Right here.
That's
Okay.
fair.
Just my, I think that's self-explanatory, right? Everyone knows that Wiley didn't go up.
And here, hold on. Let me show something right here. No, he doesn't know. I love Wile E. Coyote. He was smarter than Woody Woodpecker. Woody Woodpecker was worse. Here's your boy Larry, 43 seconds ago. This is my Valley.
Yeah.
So he broke even. So he's
wild. Yeah.
So that came in. So you know what that says? He turned with Larry saying he started at 10% and came back to break even. Yeah. So there's nothing. I booked some gains along the way. So he's saying that he basically turned a little bit of a winner into a scratch, which, by the way, Valley is copper. So that one's coming in a little bit. So he's drawing the line on the sand there. If you look at the Valley chart,
you know what? That gives me even more conviction. It's one of the reasons.
No, there's the Valley chart. I don't blame him.
Yeah. It looks like 1950 coming.
Wow. Yeah. Well,
so anyway, guys that are good, that, like your network, you brought up the guys in LA talking copper. They give you, when they're seeing things, and maybe they were on the other side, but then they're coming around the other way, it gives you more conviction about the trade. And so that was cool to see from Larry.
Well, it does, because it's like the cliche, Coach. If you watch every move or every tick, it's not going to really matriculate or develop as it organically should. Yeah. I mean, if you're looking at a long-term picture, you can take a breath and maybe not micromanage. That's my greatest, starting as a day trader, and one of the, I was a very good one, to say the least. I'll say that. I'm still, it took me a decade to just unwind that type of thinking too fast and let things play, But that's where we sit. Any questions?
Yeah. I'll just leave it with this. Keep an eye on copper. Copper in the market are pretty, not a 90% correlation, but there's some correlation. And the magnitude, if copper bears are right, of the decline, I think will give you a feel for the magnitude of the correction that's going to come in equities too.
Good, Coach. Big call. Okay. I'm even going to join the trade.
All right, buddy.
Okay. Trade well, everybody. Thanks for sharing. Enjoy.
Thank you, Mike. Great rapping with you about the markets every Tuesday. One of my favorite 30, 45 minutes I spend during the week.
Touche, Coach. I appreciate the honor. I feel the same. Right. Trade well, everybody. Cheers.
Adios.